Good morning, guys and gals. Welcome to another video brought to you by Total Control Traders. If you know others that may benefit from the content we provide, please consider retweeting and sharing our channel. All right, let's get right into it. First one, SPX. Our focus is now back on SPX first. Well, it's been back for a few days. Right, let's discuss what happened on Friday. It was a key day following Thursday's bounce. So Thursday we saw a bounce, a back test of this previous trend line that was keeping us down during that February consolidation. We can see triple rejection here, and then Thursday we got a bounce, a touch right on that trend line alongside the previous all-time high. Doesn't show as well on the hourly, but on the daily. So previous all-time high right here, which lines up with the 0.5 fib retracement from the low to the high. The low from February's retracement to the new all-time high. So that was key. That was number one target. Actually, number two. Number two must hold. Number one must hold was this wedge, this pandemic trend line, which we lost. And then number two was here. And the last must hold for bulls was the GP. So because we bounced from the number two must hold, the 0.5, the chart is relatively strong. So Thursday's video, if you haven't seen it, make sure to watch it. On Thursday, called out new all-time high potential on SPY, SPX. And Friday was key to see that follow through. So on Friday, let's take a look. Friday early. No, this was after hours. So after hours, we came up to this trend line, short-term trend line that's been keeping us down, triple rejection. And we see rejection again at midnight, following a back test of this previous resistance of GP. Then we just went from there. Early in the morning, opened up, and we started running right away. In the middle, there was a big wick down. Now, this was, to me, a little bit of a red flag. But you look at the volume. Dip got bought. Crazy bought. Okay? And then the volume follow through. Now, the key is the rejection that had marked. So, in my tweet, if you're not following, make sure to check it out. The handle is @_TCTraders_. And in the tweet, I mentioned that this zone that's been keeping us down before, we can see 1, 2, somewhat 3 rejections before it became support once, and then chop around it, but then another 2 rejections. So this was a key zone that we had to break. And as I was saying in the tweet was, if we don't touch it or if we see a hard rejection, we'll likely be looking back down at the GP, that third must hold, the last must hold. So coming here, we had a little bit of a fail for touch. And that's why if you zoom into the closer time frame, a fail for touch, and you can see a huge drop down. But then the dip got bought. That was key. And from there, it just went straight up. Now we're seeing a little bit of a stall at that new all-time high resistance. On the daily, we can see that this was a key resistance, triple wick right here. And this was a spinning top candle. Well, was supposed to be a spinning top, but the next day we got over it before the actual pullback. So this 3980.4 on SPX is key to break. However, due to the follow through, even though we are lacking a bit of a bull volume on Friday, next week reminder, it is a shorter week. So even though we're lacking a bit of a bull volume, I would anticipate new all-time high to come on this move. However, where the target is at, what the risk to reward, it's about 1% upside versus looking at the longer time frame. GP is way down here from November. We have not had a daily trend reversal yet. So a consolidation is needed. Whether if it's going to be a month, 2 months, 3 months down the road, but a consolidation will be coming. And we are going to go over VIX to try to see when the consolidation is going to come. So on this GP, if I'm looking at it, there's about what, call it 1 to 2%. Yeah, it's about 1 to 2% upside reward versus to the GP is 12% down bears play. So risk to reward is not very much worth it for me up here. I will still be playing bulls, but more so ETFs and smaller sizing, while I'm focusing on accumulation of bear plays. One thing to keep in mind is when everyone is looking one way, and right now I'm not getting a clear sense of where the majority of the market participants are looking, whether that's new all-time highs or, a consolidation. I would imagine it's new all-time highs given where the market is at. But just something to keep in mind, when the whole market is looking one direction, start looking the other direction. So while the market is looking at all-time highs, and that's why I'm getting prepared for the bear play. And approach to this that I'm looking at is first accumulation of VIX or volatility plays, because not only do those, you have to not worry about it as much, because once the bear starts moving, generally it's a stair up, elevator down, meaning stairs down, elevator up for VIX, as you can see on the VIX chart. Every time it just stairs down and then boom, stairs down and then boom. Same thing. Any of the pops, stairs down and then boom. So on VIX, it's I particularly like it for, I guess you can say, front running of the bear plays. Generally, I don't recommend front running, but with VIX, I think it's a different story. Anyways, and then from there, we'll be looking at accumulation of ETF, whichever one that's going to be, whether it's SPXS, SQQQ, TZA, there's a whole bunch, SOXS, whatever you're looking at, you got to make sure you look at the right sector that you want to be playing bears, the sector that is more relatively weak or more relatively volatile for better returns. So now let's talk about where the target is going to be for this new all-time high. Now, as mentioned, 1 to 2%, I am looking up at remaining at the same price target, 4K to 40.50. Make it a lot easier to call. Generally, if I'm looking at the 1-to-1 extension, it's, to be more precise, it should be about 40.20 to the 40.50 zone. And there is 3 fib extensions. The previous 1-to-1 extension rejection that we saw, the 1.272 from that one is pointing at 40.50. The 1-to-1 extension target from the bottom of leg 2, Elliott wave leg 2 right here, to the leg 3 to the leg 4. The 1-to-1 extension target of that one is pointing to 40.33. And the most recent move from this lower low, this is lower low to the higher high to the lower low again, we are looking at 40.20. I guess it depends how you read it. Higher low, higher high, higher low. Anyways, 40.20. So in this range, I'm looking at 40.20 to 40.50. 4K does have a big psychological resistance, so that's why I am including 4K on it. Just call it 4K to 40.50. From there, so we broke this key resistance zone, and now we're looking at new all-time high. So that's it for SPX. Know what your game plan is. Next week is gonna be one or the other. It's gonna be either extremely exciting in the sense that we're gonna go boom, new all-time high, boom, straight back down, or it's just gonna be a slow grind up while this volume slowly increases. Now, for bears, of course, you want to see a crazy push up followed by a crazy push down. For bulls, ideally, you want to see a steady growing bull volume going into that target, and then a huge spike in bull volume, perhaps pushing it over, overshoot this 40.50 before a pullback. So those are my bull and bear thesis. Make sure to have your personal bull and bear thesis ready. Know what your game plan, develop those game plans based on your thesis, how you want to approach this. This next week is going to be, in my personal anticipation, is going to be one of the more exciting weeks. Then from there, we should know clear direction of whether this is going to be a breakout or a breakout fake out. So if it's slow walk up, that would be a breakout. A breakout fake out would be a overshoot it and then straight drop from there. So we have seen a lot of bull traps and bear traps recently, and that's why I'm leaning a little bit more towards breakout fake out. This one was actually breakout, and then we started walking again before the pullback, but this one was a breakout fake out. And some people would call this a bear trap. You know, the bull trap up here, some people would call this a bear trap because of how we broke down under the pandemic trend line and then we bounced not far from there. But essentially, if you look at the charts, this was a key zone to bounce from before the GP key zone. Okay. All right. Next is, let's do NAS. SPX. No, let's do Russell first. Russell. I'm going to change it up. Let's do Russell. And then we'll do NAS, and then we're going to do QQQ over IWM. All right, so Russell, we are seeing a stall right at that daily 8.5 fib as well. Essentially, because of the overshoot of the sell and because of the daily bull divergence, I am looking at GP for the bounce. So from here, there is somewhat of a channel forming. You know, this is the trend line that we want, well, bulls must hold. So this was a bear divergence up here. It corrected fairly nicely. And then now there's a daily bull divergence. So now key is to see where the higher low or whether we're going to form a higher high. Essentially, this is a higher low. And then we're going to have to see if we start rejecting from here, then that's going to be a lower high. Or we're going to shoot it straight through. There is still quite a few resistances. One at the GP. Well, first one is daily 8 and then GP and then this key zone up here before potential for making new all-time high. So with that being said, I'm watching for a reaction at the GP. And then let's get into NAS, and then we're going to see why there's a potential for Russell to make new all-time highs. Okay. Even though if you look at the chart, you know, we have ran 9, so it's like, what, almost 200%? 150%. All right, NAS, still one of the relatively weaker charts. NAS remains one of the weaker charts. We did see a bounce from that GP. A bit, I think we missed it by a few cents. $1.70, we missed it. But close enough, you know, based on the index that's trading at 13,000, $1.70 is nothing, right? So close enough. We did bounce from the GP, and from here, even on the daily chart, you can see it's basically a touch. Now, if on the daily chart you see a gap, then I wouldn't really call that a touch. So from here, we did see a bounce, a follow through, but we are still relatively weak. From here, this next, let's see. Already. All right, so the breakdown of this trend line was the key. That chart is going to remain weak. From here, we did bounce straight back into that wedge and past the GP already. The GP from this most recent drop. So meaning on the shorter term wise, chart is stronger. Let's see, where do we rejected from GP. So this GP remains must break for NAS. Just basically this key zone, the bottom part of this key zone. We can see how many 1, 2, 3, 4, 5, 6, 7, 8 rejections from just this short period of time. This is a must break for bulls to come in on NAS, for bulls to have any sort of confidence. First, before that, however, is going to be this trend line that's been keeping us down. We can see 1, 2, 3, 4 rejections on here already. So let's see what the reaction coming Monday, Tuesday is going to look like on this trend line. All right, and now the key that I'm excited to tell you guys. Look at this. So QQQ, IWM. Remember this chart I said to keep on your top watch. We rejected, we double topped at 1.91, 1.92. We double topped, and then from there I was looking at this pattern that we were oversold and at the trend line. So I was expecting a bounce from QQQ versus Russell selling off, one of the two possible scenarios, or both of them happening at the same time, to bounce this chart, because it is QQQ over divided by IWM. So the bigger the value, the top value QQQ, the higher the chart goes. The lower, or the higher the IWM value, the lower value, the lower the chart goes. It's a divided by. Okay, so if we look at this, we overshot it, and then funny enough, they closed it right on that weekly 8. Remember what I was saying, that there's a potential for a repeat of this pattern, even if we overshoot it by a little bit. So next week is going to be key to watch this chart. This week was key. Every week is going to be a key. But, if you look at this, this week I said, you got to watch how far away from this weekly 8 that we close over or under. And then the week after, if we did close over it, the week after, you're going to want to see follow through breaking away from it, or else it's going to be a repeat of this. NAS going to be continuing to be weak, and it's going to be weeks of selling off. So with us closing right on that weekly 8, however, we did have a huge upper wick, or half of the body, equivalent upper wick over here. This, to me, I'm a little bit more bearish on it, because we failed to break over that weekly 8. But it is an increasing bull volume on the weekly. So next week, there is a chance that we're just going to break over it. Next week, we're going to have to watch this chart closely to get a direction of NAS. Watch this close, well, both NAS and Russell. So, and then there's Dow, just closing at new all-time high. The all-time high close, the highest close ever on Dow already. So tomorrow's video, we're going to go over all the Dow tickers to see what are the relative strength now. One thing to keep in mind, because it has been the strongest of them all for some time. But if we were to look at this, let's see, 12.3% from the previous all-time high versus SPX is 17%. So there is still room to run versus NAS. There is 42%. So on Dow, there is still room to run. I would anticipate that there's still, potential. It's still going to be relatively strong versus the SPX and NAS going forward. So we're going to keep a very close eye on Dow going forward. And we're going to have game plan ready as to where we're going to be looking at for target wise. Now, look at this back test. This was, actually, we didn't get a rejection here. So it wasn't a back test. Where is this from? So this is from leg 2 to 3 to 4 of the Elliots. Interesting that we didn't see any reaction. Instead, we just blew past it and back tested, and then from there we started going again. All right, so tomorrow's video is going to be a relatively long video, because I think there's about 65 tickers on Dow, which I had marked all of them down, and we're going to go over them tomorrow. All right. That's the market. Let's do a deep dive as per usual on our weekend video. So 10-year over 2 years still stalling. We are still trading over those trend lines. It's not exactly a back test when we break under it. So let's take a look at US 10-year. Wow. That bear divergence barely had anything, eh? And then they corrected the divergence. So this is no longer in play. And then we have a bull divergence. Holy. So daily on the US 10-year bond, there is a big daily divergence now. Be careful. Be careful. I'm looking at this as a warning sign for the market. There's a few that we're gonna go over, so let's mark that down as the first sign. I'm gonna make a note of it. US 10-year. Let's see what the weekly and the monthly look like. Nothing major on the weekly. We are overbought, but other than that, there's nothing major. Monthly still looks okay. There is still more upside, a whole lot more upside to go on this US 10-year. Okay, so a little bit of a red flag. Then next is VIX. Let's see, VIX. Coming up to that trend line that's been holding us ever since the beginning of the pandemic pop. You can see support here, 1 or 2. 1 support, 2 support. Now coming up to the 3rd support. All right, that's interesting. 3rd support coming up. And now let's take a look at, you can see how these huge spikes, they have roughly about the same distances. So let's take a look. This is 110 bars. This is 128 bars. Oh, this one's going to be long. 200. 66. 80. So roughly your average is about 100, I would say. 100 bars. 100. Oh, okay, so that's not for some time. So the next, based on that, the next big correction, the next spike, I guess, the huge spike in VIX would be around December 2022. So on the shorter term wise, there's nothing too much to worry about. Or on the longer term wise, there's not big correction that I can foresee yet. And that's why, you know, there's with all these what are they called, assumptions of potential huge correction coming, I don't really see that yet. And by going over the chart just now, I do believe that's going to be the case. You know, we're not going to see a huge spike in VIX as we did in pandemic times for quite some time. But on the shorter time frames, if you look at this, you know, there's 13 weeks, 8 weeks, 12 weeks, 12 weeks. So it's about every 11, 12 weeks kind of thing. 12 would bring us April, mid-April. So take a note of that, mid-April-ish. That is only about 2 weeks away. Make that down, or mark that down. To April 19th. Roughly April 19th. Okay, so that's the second one. And then gold, we are starting to see that bounce from there. Similar pattern, repeat pattern as this. So last time, huge spike, came back, bounced, and then formed a W, and then found the bottom before a nice leg move up. Okay, so huge spike, came back down. This might take some time to form out, but we are at that. You see, this bounce was previous high, and then we started bouncing from there. So this bounce previous high, and we are starting to see a bounce from there. Essentially is a bull flag of some sort. Would it be 2 months? Anyways, so keeping eyes on gold, but not really a leading indicator that I like to use personally. But watch where the bounce goes to. So it seems like we are still getting a rejection from this trend line that we previously found support on. Okay, and then silver, no. How's oil doing? We are seeing a little bit of bounce, trading a little bit over that 88. Straight chop though. It's holding up pretty decently considering how far we ran on this last leg. No clear direction yet. Would still anticipate a little bit more downside. We are right around that 88, so no clear direction yet. The chart is cooled off now, so in the sense that either direction I want to go, the chart is ready. US dollar, one of my more main concerns for market. We have seen now this previous channel that was keeping us down, and then we have seen a breaking over this key resistance as well, that lining up with the upper trend line of the channel. Now we are having a stall of this previous support at 92,824. There is a chance that we just form a bull flag from here. So keep your eyes on US dollars. It'll be a telltale sign. There is a slight daily bear divergence. Based on the slight daily bear divergence, the pullback on Friday should have been bigger. So the chart is still relatively strong. And remember, there was a huge long-term sell-off before this now finally started bouncing. So we could see a long-term bull run on US dollars. Okay. And there's one more that I'm coming across that supposedly is a few days ahead as an indicator. So let's see. Not really seeing it. February 16th, so it's all the same. Someone was mentioning that this could be a leading indicator, but let's see if for SPX, March 17th, 2 days. March 18th, so 17th was the top. 18th started pulling back 2 days. Okay. 17th was the top. 18th. Yeah, I don't see the leading indicator on this. All right, so that's it for the market. Not a whole lot of red flags yet. Just, yeah, so short term wise, I would still anticipate new all-time high on SPX. Longer term wise, that theory that I put out where there's 5 red flags on the monthly chart still remains. Yeah, if you haven't seen it, I can't remember what day it was that I posted it. Let me take a look here. So might as well put this up on the screen. Let's take a look. So 1, 2. There we go. Where's the date? Ah, there we go. Still getting used to Twitter. March 11th. Wow, it's been 2 weeks already. So this essentially is still in play. US 10-year potential topping out. Actually, this was actually a wrong one because bonds would increase when market is bearish, which we are seeing right now. And then VIX is coming up to key monthly RSI support, which ended up being a somewhat of a what is it called, a trend line that we're seeing. So VIX, this trend line is what we're seeing that's been holding. Okay, and then RSI support, monthly RSI support. Okay, we are still coming up to it. And then US dollar monthly bull divergence, so that is starting to play out already. Monthly bull whoa, monthly is actually really strong. So a big concern here actually. And then gold monthly bull flag. So gold, we just saw that monthly bull flag. Yeah, so this and the fifth reason is actually there's a lot of new investors coming in, a lot of, you can see new money, new investors that tend to mark the top when a bunch of new investors without experience are rushing in. So 5 reasons, they all still remain valid. Just understand where your risk tolerance is. Now, I hate being the one that's preaching bear while the market is extremely bullish, but hey, that's what this channel is about, right? We gotta make sure we look at the forecast of what's going on in the future versus just focusing on what's already happened. We gotta use what's already happened to try to predict what's going to happen. Essentially, you're participating in the market to make money. There's no point discussing about what's happened already. Let's take a look at what's going to happen, right? All right, so that's it for the market. Let's quickly go over the hottest tickers. And I changed one. I removed FSR and put a Chinese ticker on that. I want to discuss more than one, actually. So we're going to take a look at those. First one, as usual, Bitcoin. So Bitcoin, we are seeing a bounce along with the market. Nothing major. Nothing exciting yet. We are still seeing a bounce today. Over the weekend, you could consider using Bitcoin as an indicator of where the market is going to be by the time the market opens up. Or, by the time SPX opens up, the futures opens up Sunday, 2 p.m. 2 p.m. Yeah, Sunday, 2 p.m. Yeah, so, you could get a sense of where the market is going with Bitcoin. Seems like it's pretty synced and a little bit of a head in price action. All right, next is Tesla. Seeing a bounce from the GP. Ooh, this was actually pretty good. Bounce from the GP right at, oh, what a fish off of 600. How come I saw the bounce from 600? I didn't see a, oh, it's doing that again. So intraday, I see 600. And that's what I was looking at Friday. But on the daily, it's showing lower than 600. Man, sometimes I think I debate about getting that data pack on TradingView. I just still don't think it's worth it. That minor, 11 cents difference? Yeah. Anyway, so it could be that we did trade at 599.89, but the trade was so quick that it didn't register on the shorter time frames. Regardless, that was a perfect fish for a bounce and alongside GP. So from here, I would anticipate a little bit further of a bounce, especially considering that the market is bullish right now on the short term. Over the longer term, I'm trying to see whether if we'll get to this 400 area, this key zone, previous resistance that we never came back to back test. Okay, so keep that in mind. Next is TLRY. Lack of follow through. On Thursday, I mentioned that we did close near. Let's have day. We did close 7 cents off from high of day. Wanted to see follow through on Friday. Lack of follow through a little bit concerning, but as long as the support of 21.58 is not lost, we do not close under it. I think it's still okay. We are still trading under the daily 8. We're gonna need to see a reversal. We are seeing a little bit of a curl forming here. Let's see that reversal going into next week. Next is PLTR. So we still hovering around that trend line. Understand this. The last time we played it was around somewhere around here, $24. As long as we hover around that trend line, it's just gonna slowly grind down. So be patient. It's okay to be late on this play. I think it will play out, just taking its sweet time. All right, next is let's do Wayfair first. Wayfair saw decent follow through from the bounce of the trend line. We did break the GP, but we did bounce from the trend line, and then from there, if this was all the move of the daily bear divergence, I like it. I love it. If this is the only 3 days, not even 2.5 days of consolidation from a daily bull divergence, I love what I'm seeing here. So from here, next I want to see a break of that 350 mark coming Monday, Tuesday, right? And last but not least, we're gonna go over a few of this same Chinese tickers. Look at this. So Chinese tickers, they have been oversold. There's a few of them that's been oversold coming into Friday. and we're expecting a bounce from it. So I was looking at, I got an entry around $18, no, 17 some, and then we broke down under the GP, and that they fished me. Let's just say that I had my stop under 17, and it's they fished me. Went down to 1631 and straight bounce from there. So coming Monday, I will be still looking at these charts as top plays. There's going to be a lot of them that's the same. And the GP is a key GP because it's a bottom from the pandemic low to the high 3-4 days ago, depending on which chart you're looking at. GP, this is a key GP, and you can see that it's generally lines up with a key zone as well. So TME is one of them. VIAC is another one. Actually, I don't know if this one is a Chinese name, but VIAC, similar idea. You know, I was looking at the wrong GP on this one. I was looking at this one, but this is only from the most recent move. We did hover around that GP area before another breakdown, another 23% negative, and then we starting to see a bounce from the pandemic low to the high. So this would actually line up with this key zone. So let's actually, whatever. It's 44, 95, 94, 94. All right, there we go. Right around there. Another bounce from there before. Okay, so this is okay. So both zones work. So this makes sense for us to bounce from here. This is another top watch going into Monday. Way oversold. Not on the daily yet, but look how far extended we are from the daily 8. If you look at the 4 hours, I don't know. Here you go. 4 hours oversold. Every single other time frame is going to be oversold except anything longer than daily. So from here, we'll be looking for a bounce play. But remember, this is just a bounce play. VIAC, TME, VIPS is another one. Same idea, bouncing from GP. This one is a little bit relatively stronger. And if we were to draw a zone, it would be somewhere around here to... Where's the high? 2610, 2607. Okay, so 2610 looks to be the high. So you can see previous multiple rejections, broke over, stalled. Yeah, makes sense. All right. VIPS is another one, and BIDU is another one. BIDU is the only one of the 4, 1, 2, 3, 4, yeah, of the 4 that is green on Friday. So in comparison, it is relatively stronger. On the daily, we are not that far extended on BIDU. We're 14% versus VIPS. We are 21, and TME is 23, and VIAC probably going to be the biggest. We are looking at 55% from the daily 8. So get your game plans ready. Those 4 will be my top focus early on into next week. I want to see ideally a gap down. And then if we see a gap down, that's going to be an amazing buying opportunity. All right, so that's it for the weekend market deep dive video along with hottest tickers. Make sure don't forget to give a thumbs up, please. If you're looking for that financial freedom and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. And remember, the best compliment you can give is by spreading the word about our channel. Also, check out our website and Twitter. Website at totalcontroltraders.com and Twitter at _TCTraders_. We offer a subscription model to our chatting platform where trading ideas are shared, charts are reviewed live, as well as my personal trade callouts with the most recent result of 90% correct between March 1st to March 15th. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.